What a great time of year to review the stock portfolios of some of the top investors in the world, like Mr. Warren Buffett. Hey, welcome to Stock Market Mate. Let's examine Warren Buffett's top 5 stock holdings going into 2023 in this video, as well as do some analysis and break down each one's reasons for holding status. However, with many newcomers eager to enter the stock market in 2023, following a 20 decline last year, there is no doubt that looking into these super investors' portfolios can provide you with a great idea list for beginning your own research. Of course, this is never a shopping list, and you would never go out and blindly buy what these great investors hold. Having stated that, let's turn our attention to the father of value investing and examine the top 5 positions as we approach 2023. Before we get started, do leave a like and subscribe to the channel to help us beat the YouTube algorithm. Although over the long term, Berkshire Hathaway has significantly outperformed the market, not all of the stocks in its portfolio are constantly hot. There were a number of duds in 2022 that fared horribly, but that does not imply that they will consistently perform poorly. Buffett has stated that his preferred holding period is forever, and he has frequently discussed the advantages of owning stocks for an extended length of time. Buffett's 5th largest holding, American Express. American Express is one of Berkshire's oldest and largest holdings and has been around for many years. Yet it looks a lot different today than it did in the past, since it has embraced both financial technologies as well as a new, younger cohort of card members. As a result, there has been a significant recovery from the early pandemic declines, and American Express has reported high improvements in year-over-year revenues of 30%, 25%, and 19% for the first 3 quarters of 2022. These were powered by Gen Z and millennial consumers who are signing up as cardholders and taking advantage of bonuses and privileges at high rates. And despite inflation, American Express has grown its net income and remained profitable during the pandemic. Even after 2022's outstanding success, the stock price dropped marginally during the previous year. American Express stock may surge if the whole market starts to rise again. The same favorable factors that Bank of America is expressing are also helping American Express, notwithstanding the fact that loan losses are likely to rise when the Fed raises interest rates. Amex has the opportunity to more than make up for these loan losses by increasing its net interest income on the outstanding balances of its cardholders. The Fed's forced hawkish position in the face of high inflation is the wind in its sails, contrary to the general rule that financial stocks do poorly when the economy weakens. American Express's readiness to work with both sides of the political spectrum is another factor in why it consistently outperforms its rivals. It serves as a lender as well as a payment processor. The former may be less appealing during unavoidable economic downturns, but this combination can significantly boost profits during expansionary years. The problem is that expansionary eras often endure far longer than deflationary ones. Buffett's 4th largest holding, Coca-Cola. Coca-Cola, the world's largest beverage company, is Buffett's 4th largest position and the stock that Berkshire Hathaway has owned the longest. The market value of the 400 million Coca-Cola shares that Buffett's business owns is around $25.5 billion. The Coca-Cola operating model has the advantage of being quite predictable. Regardless of how poorly the American economy or stock market performs, consumers' beverage consumption patterns don't really change. In the event of a recession or other economic downturn, they are likely to continue purchasing Coke products if they did so during an economic upswing. This is what generates the business's dependable operating cash flow. Additionally, Coke is as geographically diverse as a company can be, which helps. It is active in every other nation in the world save for North Korea, Cuba, and Russia. This entails maximizing prospects for higher organic growth in new countries while utilizing predictable cash flow in mature markets. Another bright spot in Buffett's portfolio amid a difficult year for Wall Street is Coca-Excellent Cola's dividend, which brings in more than $700 million annually for Berkshire Hathaway. Coke has been increasing its base annual payout for 60 years. Only a small number of publicly traded corporations can claim a longer uninterrupted streak. Buffett's 3rd largest holding, Chevron. Chevron, an oil company, is the 3rd stock that accounts for an incredibly high proportion of Berkshire Hathaway's invested assets. In nearly 2 years, Buffett and his group had amassed a 9.4% interest in Chevron, or an 8.8% share in the company. Buffett appears to be betting on the sustained outperformance of crude oil and natural gas with his big investment in Chevron. Europe's demand for energy supplies has been called into doubt by Russia's invasion of Ukraine. Meanwhile, oil and gas corporations reduced their capital spending as a result of the COVID-19 pandemic. With this lack of investment and the uncertainty of the supply of energy commodities in Europe, it's likely that the spot prices for crude oil and natural gas will continue to be high for some time. Buffett can also grin at the balance sheet for Chevron. Chevron has just $8.2 billion in net debt as of the third quarter, down from $25.7 billion in net debt at the end of 2021, and a debt ratio of about 13%, while the majority of large energy businesses are heavily indebted. To put it another way, Chevron is more financially flexible than other oil and gas companies, which is why it has been able to repurchase up to $15 billion of its common stock this year. We would be negligent if we failed to mention that Chevron is a fully integrated energy company. This is a technical way of indicating that there are activities beside drilling and exploration taking place. Chevron runs refineries, chemical factories, and pipelines. Buffett's second largest holding, Bank of America. Bank of America's position as Berkshire Hathaway's second largest holding should not be surprising given that Buffett favors investing in the financial sector. As of last weekend, this B of A investment had more than 1 billion shares, including those held by Buffett's hidden portfolio, and was valued at $33.5 billion. Buffett favors bank stocks because they have a history of making money. Banks are able to benefit when the US economy grows over time by expanding their loans and deposits. This usually results in strong capital returns to shareholders in the form of dividends and share repurchases. Bank of America is unique among American money center banks in that it is more susceptible to interest rates. B of A is benefiting from a significant increase in net interest income, which increased by $2.7 billion in the third quarter compared to the same period last year, as a result of the Federal Reserve raising interest rates at the quickest rate in decades. Also, the nation's central bank is still boosting rates, which is good news for Bank of America's financial performance. Also, B of A has done a fantastic job of increasing its operational effectiveness by encouraging digital banking. 72% of its 56 million verified digital users were actively banking online or using a mobile app as of the end of September. This trend to digitalization should gradually but steadily increase B of A's earnings because digital transactions are far less expensive for banks than other sorts of exchanges. Buffett's first largest holding, Apple. If there was ever any doubt about the Oracle of Omaha's fondness of portfolio concentration, Berkshire Hathaway's holding in Apple has put it to rest. In Buffett's annual letter to shareholders, Apple is referred to as one of Berkshire's four titans and represents around $120.7 billion of Berkshire's investment holdings. Apple is unique because of its inventiveness. More than 10 years ago, the iPhone launched the smartphone revolution. But since the release of iPhones with 5G capabilities 2 years ago, Apple's already strong share of the US smartphone market has expanded despite the heightened competition. Products like the iPhone, iPad, and Mac are what keep people interested in Apple's brand. Apple CEO Tim Cook is in charge of the company's progression to prioritize subscription services in addition to the success of its physical products. Apple's services division boasts consistent double-digit growth, fat operating margins, and most critically, the ability to smooth out revenue fluctuations brought on by physical device replacement cycles. But probably the biggest lure for Buffett is Apple's drive to return capital to investors. It pays one of the highest dividends among public businesses, and since the start of 2013, it has repurchased $554 billion worth of its ordinary shares. Well, that's about it for today's video. Let us know your thoughts in the comments section. If you found this video helpful, kindly click the like and subscribe button. Thank you for watching, and we'll see you in the next one. If you enjoyed this video, you're going to want to watch one of these two videos right here. Enjoy!